Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. And this is analysis for May 18, Wednesday, tomorrow, 2022. What kind of day we had? We had a super good bounce that happened, around 400 plus points gained in Nifty. After a very long correction of nearly 15% of correction from the recent swing high. Will it sustain? That's the question, $1 million question in front of. Let's try to see the charts and see what do we get there as answer. Pre-market analysis, as usual, would be based on all these parameters that you see on the screen, the left and the right, and also we'll have some wrap-ups and then some actionables as well. Right? It's going to be a Wednesday tomorrow, one day ahead of expiry. And look at this candle size, right, on the daily charts of Nifty and Banknifty. Wide range, clear bullish bounce. Don't know whether it's that cat bounce after a big fall. We never know. We never know that today, at least, right? So it's clearly a good bounce that has happened after a big 15% of correction. This is also nearly 20%, and we have a wide range. So both of them was a gap up, right? And look at another chart, the same, right? We had a trendline channel down move. We are at a very good crucial support, very close to the previous swing low on both indices, and then we had taken a support for last. We are consolidating basically for last 2-3 days. No, not ready to fall further beyond from here, and although it is not really close to breached, but very close to retested the previous swing low. So that's exactly what happened. Right? It's a bounce up and very decent bounce up. Right? That shows the strength of the presence of the buyers in the market. Right? The retail money is still there, and today was an IPO of LIC. Although LIC doesn't come as part of the Nifty 50, but it is a big day in the history of the stock markets of India today. Right? Although we opened with a discount IPO listing, it was it would be a day in the history. One of the largest IPO in that sense, right? So let's get into the price actions and see what 417 points gained and 2.63% of gain in a wide range bullish candle, by 2.1% of gain, 700 points gained in Banknifty, wide range again there also. We are in a trend line down move after a breakdown of the head and shoulder and the double top on the daily short term, and we are trying to bounce up from the support zone. That's what we are, right? Look at this price action today, gap up and then trended up more. Not thinking about even retracing a little bit extra. Steady up more has happened on both the indices, and the Bollinger Bands show that there is reason for the volatility to spike, the distance from the median to the price where it is, and clear band walk has ended probably, and clear spill out of the Bollinger Band's expansion on the downside is what we saw on both indices. Clear bearish is what it still indicates the Bollinger. Right? So for resistance levels, if you see, it's support can be seen as 16,200, then 16,354 leads from match 50, and then above that there is a gap of 16,550 and 16,650 level, then 16,700, 16,750, then 16,800 and 16,900 Fibonacci 38. That's immediate. Then you have 17,000 rounding number. Alright, resistance. So that's Nifty, Banknifty. Sorry, before that, downside, the resistance, the supports downside would be first 15,800, 15,950, which is 16 retracement level. There is breach again, and still that's support zone. Below that you have 15,500, 650, that zone, which is not at breached previous swing low, and then if that is breached, then 15,350, 15,450, and then it goes back to the 14,900 levels, right? That's the supports of the Nifty. Banknifty, the immediate support right now is 33,000, 34,100, which is nice 16 retracement level. That is that earlier breached, and then if that once again gets breached, then you have 32,800, 32,400 levels, right? If that is breached, then you come back to 32,000 levels nearby, which is the previous swing low, and so it's going to be a major support zone. If that also breaches, they go to 3050 and 31,000 kind of 3,500 and 31,000 kind of levels, some support side. Resistance is similarly on the upside would now be 34,550 to 34,750 levels. Then above that you have a gap resistance is coming into 35,000 levels, which is also if you match 50 retracement there. Then above that you have 35 600 900, that's one, and then above that you have 36 300 36 900 Fibonacci 38. Then you have another gap resistance that's coming until 37 500 levels. So 37 500 on the upside, and downside 32,100 is crucial levels for the Banknifty. Similarly in the Nifty, 15,650 is major crucial level to watch out, and upside 17,500 16 basically 16 this zone where above this, at least above this guy. 17,500 is the ideal place to look out. So as compared with 37,500 on the Banknifty, but before you have another gap that is coming just above 16,700 levels, right? So that's a support resistance level. Make a note of these levels. I have only one more day to expiry, so it may make more sense if you correlate and treat that with the support resistance of the that can be derived from the operators analysis as well. Momentum no divergence, same momentum has climbed back in the sideways on both indices. You can see that Nifty and Banknifty. Right? Just manage whether it sustains there and holds the other side at 40 support is something you have to see. Medium term also it's it has now come back into the sideways. The only question is tomorrow will tell whether you're going to sustain there or fall back or face resistance and fall back the momentum. Momentum as of now is rising, and it seems to be in the sideways on both the indices on both time frames. Trend as of now remains to be bearish on both the indices and both the time frames. Right? And trend has taken a small bend. That means probably the rising the strength of the bearishness has reduced a little bit, but even now the bearishness, the trend has not changed as such. If you look at on both medium term and short term, trend remains the same. Although the momentum has picked up, does not mean that the trend has changed. Trend is bearish. Already had cooled off after 2 days of mega moves, which has almost hit 25 levels. Now it is 22.7. Today is 7.2% of cool off that has happened, and implied volatility in the Nifty is 22.86. Implied volatility percentile of Nifty is still at 90% level. If you take 52 week levels, right? So, and 20 below call-ups is what we have to hope for as traders, right? And 22 still means that there is still the fear allocated, and that's very much evident in the markets, and uncertainty is still there, right? It's not done with yet. Look at the charts of the operators analysis. Some unwinding of the calls can be seen. That means some bullishness has come in on the options or data. Some unwinding has happened one day ahead of the expiry. On the Banknifty also, some call build-up also has happened if you see the change in open interest. So levels as of now still is wide range. 2,000 points is where the put writers and call writers are seeing the levels at 2,000 points apart. 15,000 and 17,000 is the highest put and call writing is seen. 16,000 and 16,500 is the second level of highest put and support. Put and call writing is seen, right? And 34,000 and 34,500 very narrow range is where the highest put and call writing is seen in the Banknifty, and 33,000 and 35,500 wider range is where the second level of highest put and call writing support resistances are seen. But my put call ratio is clearly bullish suddenly. Yesterday it was 0.41 kind of levels with the put call ratios. Now look at the bullishness that has come back. It's one above one and clear bullishness in the put call ratio. Futures open interest also was showing bullishness long build up yesterday and today also. Right? Banknifty was showing low unwinding, today it's long build up. So clear bullishness on the futures wire data and put call ratio, and a lot of call build up and put build up and call unwinding has happened on the open interest data of the options as well. So why are you showing bullishness? Look at the green all over here. All sectors, a lot of heavyweights are done today. Good. Banks are done. HTC Twins are done. Reliance has done well. Kodak Bank, TCS, IT stocks are done well. All across the sector, green is what you see in the heat map. Now look at HDFC Twins. Both of them are trying to climb up. One is trying to, both are trying to retain and move up the distance from where it had fallen up, and the momentum has once again turned on the sideways with both the HDFC Twins, but long way to go. Now what you see here is some mistake is there. Actually it was supposed to be Reliance. Let's get into the Lions charts and see how it performed today. So you have Lions here, which seems to have taken support at the neckline of the breakout of the cup and handle pattern, and it seems to have bounced and given a beautiful 4% move today. Right, that's exactly what happened. So Lions is done excellent today, and who else has done? Kodak Bank is also doing great. You can see that the greenery is increasing, and it seems to have taken out the long resistance that is in the mid between the top and the bottom support and resistances. Right. So Kodak and Reliance seems to have performed. IT stocks are performing today, and greenery can be seen. But remember that the momentum for that is still in the sideways zones, and TCS also is showing some greenery. Remember, it is at a very long support zone, and the attempt is to get into the sideways zones from the from the bearishness where it is both the IT stocks. ICICI Bank is also showing good price move, and momentum is picked up in the sideways now. Trend seems to be trying to cross over. So all banks are done good today, and then overall the attempt is to get back in the sideways zones from the bearishness, right? And the performer is Reliance from the heavyweights. Sectoral performance, industry sectors, if you see IT has, all the sectors have done well, right? Nearly 3% IT up after a long beaten up sectorial thing that has happened since last many weeks from the IT because of the US market fall. Now look at metal, 7% up, bounce up has happened because of some fundamental news from the China or something, right? Auto also has moved up 2.4%, pharma is 1% up, FMCG is 2% up, realty is 2% up. So across the sector, up moves happened. But who has gained is FMCG, auto. They remain in the sideways zones in the short term, just like yesterday. And metal also has joined them into the sideways zones, but pharma and reality and IT still remain in the bearish zones and they're ready to get back. So from the sideways, you'll have to see whether which of them is getting into the bull zones again, and that is where we have to think about going long. Until then, wait. Institutional participation, if you see, it was huge selling that continued, and today this data is not available from the Fyers side. Today, as usual, has been buying, and today also they might have bought. And I would guess that at least the Fyers, even if they have not bought, they might not have sold. Big is what that was seen today. The data is not available. Let's just quickly go and check whether the data is coming for today. Yes, data has come. So this is very interesting. So the market has moved 400 points, and look at today's FII data. Right, FIIs have sold 2,000 crores today also, and an equal amount of buying has happened from the domestic institution, and the retailers did the rest of the job. So the confidence of the market participants in the is what you can see from here. Right, it's an equal fight between the two years and FI that happened, but still the market moved 400 points up, right? With none of them, clearly making an edge, right? So that's something good to see. But this FI continuing to sell, without any looking back or any small pause, even for a week, is worrisome. That worry continues since your participation. Look at the currency, right? The dollar. Some cool off has happened on the rupee, USD, INR. Rupee has strengthened a little bit, you can see, but look at the momentum. It is still at very high levels, and it's 77 above still. Remember, it had almost hit near the 77.9 kind of levels. So it's nearly 78 rupees for a dollar is what the rupee has weakened to, right? And looks like this has some correlation, some amount of correlation probably with the US dollar currency index. US dollar index is cooled off a little bit. That although it is not directly correlated, the dollar has cooled off. So from the peak, rupee has strengthened slightly, but it's at all-time low levels of the rupee that we are seeing right now, which is not great for the markets also. This is the US markets indices that you are seeing: Dow Jones, S&P 500, and Nasdaq. Nasdaq and S&P 500 top. It's Nasdaq. So here also you are seeing a very good attempt to bounce up. Since the last 2 days, Dow Jones has bounced up on the edge and trying to get into the sideways. Nasdaq also has done the same, 2-3 days of attempt to get back into the support zones from where it had slipped, and momentum also is almost in the sideways zones. Same with the S&P 500 also. No? Attempt can clearly be seen with 3-4 days of green up move candles after a bounce of a hammer pattern that is formed on all the indices. Right. So there is some hope that is seen in the US markets. Probably the inflation might have come down a little bit after the steps taken by the Fed, or inflation data that has come in. So there is some hope that the market is, it may be not bearish, but it is not giving up and then getting into the bear markets. Now that's what it looks like. No? So we have to keep a close watch whether it will make another swing low or not. That is the thing. Would it make another swing low? That's something that because it's closely connected. US markets are closely connected to all the other markets in the globe, and then any strength in there, any substantial strength in there would reflect now markets, and any substantial weakness in there would reflect in the markets. That's and if there is nothing much happening, then that is when each of the other smaller markets would decide or make big moves up, big move or things like that. But otherwise, there is huge dependency. So what you have to closely watch is is the US markets trading further bearish from here, or is it done with 10 on the bottom and then trying to consolidate that at least? That's one thing you have to do. So this data is for us to be again watched all these levels tomorrow morning after tonight's trading also. Crude oil has again spiked up and then gaining momentum, and then looks like it's going to hit the 13-year high once again. 112 is where the crude is right now. Not good again for the markets and the economy assets basically. Gold has taken a support at the previous support zone and then bounced up, and then so in effect it's bearish and it's very weak gold, because gold is an inflation hedge, and inflation's steps towards cooling down the inflation is already taken by the global Fed central banks, and obviously gold may be losing the shine a little bit, but it's not. It's basically consolidating after doing a couple of attempts to make new all-time highs, which didn't sustain. Right now it's bearish and taking support levels. That's exactly what it was doing for 2 years from 2020, except for the brief attempts to make new all-time high, which didn't sustain. Right? That's what gold is. Look at the two actionables for the next coming days probably. That is clearly bullish, and look at the candle here. It's as good as Nifty, right? Big mega bounce moves and more than 3-4% of moves, and there is also a weekly momentum reverse divergence, which is bullish in nature. So on a medium term, you can clearly see that the market can go and hit this channel top, which is at nearly 300 plus. That can easily happen is what it indicates, but in the medium term not. And the short term, you can see that it has slipped down to sideways and still had to get into the bull zones. So now you will have to make positional calls on this rather than short swing trades, is what I feel, because you'll have to wait for this momentum to catch up in the next day and settle in above the RSI 40, RSI 60 basically. If that happens, only then take the trade for swing. For positional, you can definitely take trade, and 300 plus is can be clearly visible, because it's on a weekly basis. There is a divergence, bullish divergence, bullish reverse divergence basically, and it's in a well trending up and down in a trendline channel. So, and look at the buyers out there. There's only and sector also is doing good, right? And Arabindo Pharma is a short sell. The weekly charts is what you see here, not a daily like what is shown in the ITC. Reasons is there is a head and shoulder formation on the weekly basis that seems to have broken down from the neckline. Trend of the medium term and the short term both are bearish, and momentum also is clearly bearish, and it may be a free fall that may be happening. No good supports are seen below, so we can get clearly swing and position shots on this pharma stock. So with the pharma short, ITC down. Wrap up. Not much change in the wrap ups. Only thing is, a good bounce has happened. Whether the bounce will sustain or not is something we're going to see. The change that has happened is the bearishness has reduced to mild inflow, moderate that was there for the last several days. It's mild bearish still. And what you see here, and put call ratio is bullish, momentum is sideways. So the two things that makes it moderate to mild. Okay. So the market is mild bearish. Market is at a crucial support, and we continue to be at a crucial support. So it could fall down and make another new swing low. It's possible. This bounce could turn out to be a red cat bounce. It's all possible, right? So all this downward was triggered by the RBI because of the inflation that's across the globe and across our country also, right? So US markets, historic high inflation, and a 17-year high rupee weakening, aggressive Fyers selling since almost a year now, high crude, and global war is still there, weak rupee. So all of these negativities are there around, and right, it's still around. So still uncertainties there. So market is not cooled off to 15 lakh kind of levels yet. So volatility still remains. You have to be cautious. Positive factor is that the kind of buying that is happening from the dips, right? The confidence that is there in the retailers to move the market, the kind of money that is flowing from the retail market into the markets, unlike what used to be earlier, where there is panic and big crash and then it takes a long time to recover. So that does not happen nowadays because it's not a bear market is what it looks like, right? 17,500 and 37,500 and 15,450 and 34,450 were the levels you have to watch on the upside and the long and the downside, right? So VIX is not greater than 24, it's greater than 22, it's not updated, but until it goes up below 20 and reaches towards the 18, 15 kind of levels, until that happens, there's going to be big choppy moves to trade intradays, and even swing trades can have surprise gap ups and gap downs like how it happens, which can wipe out the capital if not hedged. Right, so risk define your strategies. Cut short your position size as long as the VIX is high. That's what you can do. That's my view. Mild bearish still, right? And although the market has turned to sideways suddenly for a day, try to keep a close watch. I'll not change my view unless the trend changes. It gives me signal that it can, take over the resistance. The upsides had still not come, so the view remains the same as mild bearish. I hope this helped to frame your trade plan and view for the next week. If it helps you in some way, consider hitting the like button, subscribe if you are not done, and share to your friends. We have very few subscriptions. Thanks for watching. Happy trading, happy learning. Bye.